We start learning with the dojis, the marubozu, the hammers.
So as a day trader, each and every candle structure is very, very important.
Once they find a good strategy, they start misregarding the candlestick patterns.
Candlestick psychology in the bigger picture, avoid taking fake trades.
This one complaint from a lot of traders.
Each and every candle structure is very, very important. Bears are having the energy, then the low would have been broken.
How do you actually use these basics?
Hey guys, this is Gomathi Shankar, full-time price action trader. So I have partnered with Upsurge to create amazing learning content for you people. So stay tuned, more contents are on the way. So hit that like button, share it with all your trading friends and do subscribe to our YouTube channel.
Alright, another day, another trading concept. You're with me, Ansh R. Hiran. And again, we have with us Mr. Gomathi Shankar. Welcome back, sir.
Hey Hans, thank you.
Alright, so this one complaint that I have from a lot of traders. Okay. Once they find a good tool or once they find a good strategy, they start misregarding the candlestick patterns. Okay, this is where we start learning the price action. We start learning with the dojis and we start learning with the marubozu and we start learning with the hammers. This is what we start with.
Correct.
Right? And the moment we crack a strategy or the moment we crack a, let's say, indicator, right? We just don't feel like, okay, we feel like they don't work anymore.
Yes.
Right? So are you one of those traders or you still consider, candlesticks as a very integral part of your trading system? Or how do you actually use these basics, okay, in your trading?
Okay, so these candlestick patterns are really working and it has helped me to improve my winning trades.
Okay.
And it has improved me to avoid taking some fake trades.
Okay.
So to stay with the trend, these kind of candlestick patterns are really helping till date, and people should understand the psychology of the candlestick pattern. They are just in a plain manner, they are looking at the hammers or morbozos or dojis, but the psychology behind that and the buyers and sellers mentality around that particular price levels, they are missing to watch out in the candlestick patterns.
So let's see some example how you actually use them.
Yes, true. Let me show you. So let's consider any candlestick pattern. So let's say there is a bullish candle. Let's consider this is a daily chart and this is a day candle. So once this bull candle has formed, my key level to watch out will be this particular candle's high. If this particular candle's high is getting broken the very next day, then I will confirm that the bulls are having the strength.
Previous day high,
previous day high and previous day low. In case if the prices are not breaking that particular level and if the prices are coming a 50% below that particular bull candle. Now let's say this is the 50% of this bull candle. Now let's say there is a bear candle forming next. Then what I will understand is this is the high and low of this particular bull candle and this is probably the 50% of that bull candle's body. So what I understand from the next bear candle is bulls are actually not having power and bears are trying to take control.
Correct.
That I will confirm whether right now by looking at this candle I will understand that bulls are not having power probably. So what I understand from this structure is bulls are literally losing their power and bears are literally there taking control.
Correct.
Now this I will confirm 100% when this bear candle low is getting broken. Now my point of watch will be this bear candle's low. Now the very next day if another bear candle is breaking this low, then I would really confirm that 100% bears have taken control and here without any second thought I will plan for my short entries. Let me show you in a chart.
But this looks like a dark cloud cover.
Yes, probably.
With the confirmation.
Probably, yes.
Correct.
So let me go to Nifty. So let us consider this particular area. So let us look at Nifty and this is what I was talking about. And this is probably a daily candle if I am not wrong. So this is a daily chart of Nifty. So I will say how I look at this candlesticks as a psychology. So here I can see a resistance breakout,
Correct.
a bull candle. Now from the very next day, what I will be looking at is, I will be looking at this particular bull candle's high. So I want that bull candle high to be broken to confirm that bulls are 100% having energy. But if you see in the next 6 trading sessions, the high of that bull candle is not broken. So almost 2, 4, 5, 5 trading sessions.
Yeah, we can just zoom it in.
So we can see the high of this bull candle has not been broken for nearly 5 trading sessions. On the other hand, bears are also not taking control. So just let us quickly understand who is having the control. So here the bull candle high is not broken, but this resistance is broken, still it is a bull candle. So bulls are having energy, but the control is not there. There are bear candles getting formed, but none of the bear candle low is broken.
Correct.
So this bear candle low is not broken, this bear candle low is not broken, and even this dragonfly doji, this bear candle low is not broken, and even this bear candle low is not broken. After so many days, so we can understand that bears are not taking control, even the control is not able to take.
Correct.
Bulls are having the energy, but they are not in control. Bears are not having the energy. If bears are having the energy, then the low would have been broken.
Correct.
So bear candles are forming, but there is no strong control. So this bull candle high is finally getting broken on this particular day.
Yeah.
So actually it is a gap up opening. We can see over here, the open is over here. So we can consider that bulls have actually taken control. So now we consider that 100% energy is there for bulls, and in that opening itself we can plan for a long.
But how do you use, like, you have a CPR trading system, right?
Yes.
How do you use these things in CPR or with CPR?
No, when I am looking at this particular levels in a daily chart, I would be looking at 5 minutes. I would be marking this particular candle's high in my 5 minutes chart.
Okay.
I will be drawing it as a zone. So when the prices are opening above that zone and when the prices are coming to take supports, or even if the prices are not coming to take support at these levels, still I will go for a buy and I will go for a long. So before we continue with this video, I have created an amazing CPR indicator trading strategy course with Upsurge in both English and Tamil. So there I have shared all my personal trading strategies both for swing traders and trade traders. So go and enroll for this course. Link is provided in the description. Let's continue to this video. Now let us consider the next areas. You can see over here. Now this is a strong bull candle.
Yeah.
Now I will be looking at this high of this bull candle.
Okay.
So that is broken. So the next day, confidently, I will go for a long position based on my CPR levels. Maybe above CPR or above R1 or above R2, I will be going for a long. Now, next, I will be looking at this bull candle. So that high is not broken in the next 2 days. So here, I will go for a long.
On a closing basis, it is broken, right?
No, this is like a very small doji candle. So the close is neck to neck at the high. But here the candle is getting broken. So what I will do on this particular day, this level will be marked in my 5 minutes chart. On that particular day, when this candle high is getting broken, I will go for a long. And like this, if you see, even this bull candle high is broken. Now look at the psychology. After that, this particular bull candle high is not broken. So here, bears are actually taking control. Now how do I confirm that they are having the actual control? When that particular candle low is broken. So this is what we learn as a textbook concept called evening star pattern. So we combine the three candles and we say that is a evening star.
Correct.
But actually the psychology is the low is getting, even the prices are opening below that particular low. So my psychology of looking at the candles will be each and every candle is important to me. Since I am a day trader, each and every candle's high low is very, very important to me. And even if you look at these areas, even if you look at these candles, see this particular candle's 50% is nearly rejecting the next candle. Even the bulls are not having the strength to cross the 50% of these candles. Now let's say I'm looking at the market at this particular day. So this is a bear candle. If this bear candle low is broken, I will go for a short. But what's happening on that particular day, you can see on that particular day, the market has gone up to this particular level.
Yeah.
So what I will observe is, I will observe the 50% of this area and I will see whether the bulls are able to cross about that level and whether the bulls are able to sustain. Now, if you look at this level in 5 minutes chart, what would have happened is this will be the 50% area. And in intraday 5 minutes chart, the market would have actually broken that 50% and then it would have rejected.
Yeah.
So this 50% area will be marked in my chart, and I will be looking at my CPR levels. At some levels there will be a reversal or there will be a resistance, and then I will go for a short over here. So as a day trader, each and every candle structure is very, very important. And again, if you see here, this bear candle low is not broken, this bull candle high is not broken, and this bull candle high is finally broken over here. Maybe for this particular day, on intraday basis, I would have gone for a long.
Yeah, but if you see this, this is the high of this bull candle.
Correct.
Right? If you mark this level on your 5 minutes chart,
Yes.
tomorrow when the market will open,
Yes.
it has gone up significantly.
Yes.
And because we have marked this as a resistance, and
Yes.
once we see a breakout on the 5 minutes chart,
Yes.
we would have taken a long side trade.
Yes. Yes, I would have taken a long side trade, and after that again it would have rejected like this and it would have closed below. Probably in the morning I would have gone for a long because the open is here. Open is here and the close is here. So the market is opening above the previous day high, this particular candle, and the candles are going up. Initially in the morning it was going up, I would have taken a long.
Yeah.
But the moment it reverses, probably just imagine in CPR in pivot points, it would have reversed from R3 or R4.
Correct.
So when the market is reversing from R3, R4, I will not be serious when it is reversing from R3 and R4. But the moment it breaks R3 on the downside, R2 on the downside, and R1 on the downside, then I would become serious, and then I will plan for a reversal trade and I will go for a short. So as a day trader, each and every candle's high, low and 50% is important to me. So this is how I look at the candles in a psychological manner. I am not going to look for hammer, I am not going to look for doji, I am not going to look for any evening star or morning star patterns.
Correct.
What I am actually doing is I am focusing on each and every candle's high, low and the midpoint. So this is how I approach the candlestick patterns in a psychological manner. So since I am a day trader, each and every day candle is important to me. But if someone is doing some positional trades only based on daily chart, again still it will be easy for them to understand the big picture and to stay in the trade for a very longer duration.
Got it. But if you understand candlestick patterns also very seriously, then like one can realize, for example, let's say we're talking about any pattern like engulfing, right? So there is a red candle, and then there's this engulfing candle.
Yes, a bullish engulfing.
Which forms like this.
Yes.
Right. So if you understand the psychology, as you said, behind it, so there was a bearish trend. That means bears were strong.
Yes.
Okay. Here also bears were strong. Then there was a gap down. That means even in the morning bears were strong.
Yes.
Somehow the bulls got their strength back during the day.
Yes.
And they started taking the price up.
Yes.
Not just the 50% mark, but they took the price higher than the 100% mark of the previous candle.
True.
Which shows that bulls are now very, very strong.
Yes.
And once you get the confirmation
about
the high of this candle, that's when you can say, okay, bulls have taken the control, as you said.
Yes.
And the trend will reverse.
Correct.
So even if people start understanding these patterns, like instead of mugging up the logic,
the patterns, instead of mugging up the patterns and looking for every patterns, okay, where is engulfing, where is engulfing, where is engulfing, this is what people are doing.
Correct.
Instead of finding out the pattern, they have to understand the psychology, what's happening.
Correct. So then you won't even need to remember these names. This is engulfing or this is piercing.
Yes, exactly.
Got it. And that's how you use it on all the time frames and all in your strategy.
Yes.
Correct.
And preferably, people should look at the psychology in daily charts or weekly charts. I have seen people looking at the psychology in other time frames like 15 minutes, 25 minutes, 1 hour chart. Of course, those psychologies are important, but understanding the psychology in a bigger picture matters a lot comparing to looking at the logics in smaller time frames. But someone who has mastered the psychology in a daily or weekly time frame, it would be easy for them to understand the candlestick pattern even in 5 minutes chart.
Right.
So beginners or people who are new to the market, they should focus on the candlestick psychology in the bigger picture, so it will be easy for them to understand in the smaller time frames as well.
I think the problem is where people like initially only people start like they start mugging up the location and the result of every candlestick pattern.
Correct.
Okay, this is where I'll find this thing and this is going to be the result of this.
Correct.
instead of understanding the logic behind it.
Correct, correct.
Correct. So there's no need to actually misregard the candlestick patterns in trading.
Of course, of course. It is doing wonders even in today's market. People are running behind AI tools and ChatGPTs, but still these traditional candlestick patterns, Japanese candlestick patterns, which is almost 250 years back,
Correct.
dated back 250 years, still it's working fine. And there are a lot of, I personally know a lot of traders who are having these candlestick patterns as their strategy itself. They have coded candlestick patterns, the size, the length.
Yeah, there are a lot of like raw price action traders.
Yes, yes, they have actually coded and they have automated the strategies based on candlestick pattern as well.
Even we have such features on Done which can identify all these patterns automatically.
Yes. The moment we select the pattern, it automatically shows up. Yes, I've checked it in Done platform. Yes.
Yeah. Cool, sir. That's all I actually wanted to know. That have you also started misregarding the patterns, or you still trust them, you still use them in your trading? Thank you so much for this information.
Thank you, Ansh. That's a good question actually.
Perfect. So yeah, I really hope you guys also loved this session and you guys also loved the way sir explained the thing. On that note, hit the like button if you liked it, share it with all your trader friends, and if you have any questions regarding any trading concept, please let us know in the comment section below and we would love to answer that. Until next time, we will see you in more such informative content. Till then, keep learning, keep trading and investing with Upsurge.